Good morning, everyone. Whether you're sipping chai at home or heading out to work, there's one thing that quietly shapes your daily life: inflation. Today, we're diving into a topic that affects wallets and kitchen tables around the world. Yes, inflation. It's a word we hear on the news, in conversations at the market, and even in family discussions about monthly expenses. But what does it really mean? And why should you care? Inflation is the rate at which prices for goods and services rise, causing your money to lose value over time. Imagine you could buy a bag of rice for 100 rupees last year, but today, the same bag costs 110 rupees. That's inflation at work. Your money buys a little less than before. When inflation is high, your cash doesn't go as far. Groceries, fuel, and bills all cost more. Everyday essentials start to feel like luxuries, and families have to stretch their budgets just to get by. It can erode savings and force families to make tough choices. Maybe you skip a family outing, or put off buying new clothes for the kids. For many, it means working longer hours or taking on extra jobs just to keep up. That's why governments and central banks work hard to keep inflation low and stable. They use tools like interest rates and monetary policy to try and control price rises, aiming to protect the value of your money. Stable prices help businesses plan, create jobs, and allow people to save for the future. When inflation is predictable, companies can invest, hire more workers, and families can dream about buying a home or sending their children to university. But when inflation spikes, it's big news, especially for countries hit hardest. Headlines warn of rising costs, and everyone feels the pinch, from shopkeepers to students. Today, on January 1st, 2026, Pakistan has reported a remarkable slowdown in inflation after years of struggle. This is more than just a number. It's a sign that things might finally be turning around for families and businesses across the country. December's numbers could mark a turning point for millions. Lower inflation means more breathing room in household budgets and a chance for people to start saving and planning for the future again. Let's unpack what's behind this change, how it happened, and what it means for Pakistan's future. Because understanding inflation isn't just for economists, it's for everyone who wants to build a better tomorrow. The headline making waves across Pakistan: Consumer Price Index growth slowed to just 5.6% in December 2025. For a country that's battled double-digit inflation in recent years, this is a remarkable shift. The numbers are more than just statistics. They reflect a real change in the daily lives of millions of Pakistanis. That's a sharp drop from 6.1% in November, a real sign of progress. It's the lowest inflation rate Pakistan has seen in over 2 years, and it's giving hope to families and businesses alike. Even more striking, prices actually fell month on month in December, giving consumers immediate relief at the checkout counter. For many, this means their rupees stretch a little further, and basic necessities are just a bit more affordable. The Finance Ministry had forecasted this range, suggesting that recent policy measures, like tighter monetary policy and targeted subsidies, may finally be paying off. Their ability to predict this trend is boosting their credibility. Accurate predictions build confidence at home and abroad. Investors are watching closely, and a stable inflation outlook could attract much-needed foreign investment, helping to strengthen the economy further. But the story isn't the same everywhere. Food prices dropped, offering relief to households, but non-food inflation, covering things like rent, transport, and education, remained higher, reminding us that not all sectors are feeling the same benefits. Core inflation, excluding food and energy, remains stubborn, according to the central bank. This means that underlying price pressures are still present, and the fight against inflation is far from over. So while this is good news, underlying pressures persist. Many businesses are still cautious, and policymakers know that a single month's data doesn't guarantee long-term stability. Policymakers can't relax just yet. They're continuing to monitor global oil prices, currency fluctuations, and supply chain issues that could quickly reverse these gains. The fight against inflation is making headway, but it's not over. The economic landscape remains unpredictable, and vigilance is key. This dip is a milestone, not the finish line. It's a moment to celebrate, but also a reminder that more work lies ahead to ensure lasting stability. So how did Pakistan reach this turning point? Let's take a closer look at the journey that led to this surprising dip in inflation. To truly appreciate the relief many Pakistanis feel today, we need to revisit the not-so-distant past, a time when daily life was overshadowed by the relentless surge of prices. The memories of those days are still vivid for millions across the country. In 2023, inflation soared above 30%, a staggering figure that sent shockwaves through every household. Families watched their hard-earned savings evaporate almost overnight, and the cost of living became a daily battle. Salaries lost their value with each passing month. For many, even the most basic necessities, flour, cooking oil, vegetables, became luxuries. Parents struggled to provide for their children, and the sense of insecurity grew. The crisis was not just homegrown. Global price spikes, a rapidly weakening rupee, and deep cuts to government subsidies all combined to create a perfect storm. News headlines painted a grim picture, and hope seemed to fade. Everyday life became a struggle for survival. Food, fuel, and electricity, essentials that people once took for granted, suddenly cost more than many could afford. Long lines at petrol stations and frequent power outages became the new normal. The social impact was severe. Inequality widened as the poor suffered the most. Public anger spilled onto the streets, with protests erupting in major cities. Small businesses, unable to cope with rising costs, shuttered their doors, leaving families without income. This painful chapter in Pakistan's history makes the current slowdown in inflation so significant. The contrast between the chaos of the past and the relative calm of today is striking. The memory of runaway inflation is still fresh in the minds of policymakers and citizens alike. It serves as a constant reminder of how quickly things can spiral out of control and why caution is necessary. The recent drop to 5.6% inflation is a hopeful sign, sparking optimism among shopkeepers and families. But this progress is fragile, and vigilance remains essential to prevent a return to crisis. The government and central bank are acutely aware of how quickly stability can unravel. Every decision is weighed carefully, knowing the stakes for millions of people. Now, they must nurture this fragile progress, tending to it like a young sapling, and guard against the old risks that once threatened to uproot the nation's future. The trauma of high inflation lingers in the collective memory. For many, the scars are still fresh, reminders of nights spent worrying about bills and days spent making impossible choices. But for now, there's a cautious sense that the worst may be over. As families gather around dinner tables and markets buzz with renewed activity, hope is slowly returning to Pakistan's streets. The main driver behind the drop? Food prices. December saw a 1.7% decline in food costs nationwide, a huge relief for families. Better supply chains, strong harvests, and government action against hoarding all played a role. Lower food prices mean more money for other essentials and less daily stress. But food prices are volatile. Weather or supply shocks could reverse these gains. That's why economists watch core inflation too. For now, falling food costs are easing the burden for millions. The challenge is making this relief last. Sustainable stability requires more than just cheaper groceries. The Finance Ministry's accurate inflation forecast boosts its credibility. Their strategy: fix supply chains, prevent hoarding, and boost farm productivity. Fiscal discipline, raising revenue and controlling spending, also helps keep inflation in check. These efforts are part of a broader stabilization program, supported by the IMF. The ministry knows one good month isn't enough. They're committed to monitoring data and adjusting policies as needed. The goal? Turn this dip into a lasting trend. Steady, responsible management is key to rebuilding trust and growth. The path ahead demands vigilance and flexibility. In December, the State Bank of Pakistan cut its key policy rate by 50 basis points to 10.5%. This surprised many, signaling confidence that inflation is under control. Lower rates can boost growth, but risk reigniting inflation if used too soon. The central bank cited consistent inflation within its 5 to 7% target as justification. Still, it warned that core inflation remains sticky, and base effects could push prices up later in the year. The bank's transparent communication helps manage expectations. It's a careful balancing act. Support growth, but stay ready to act if inflation returns. The central bank's vigilance will be crucial in the months ahead. The IMF's $7 billion loan program is guiding Pakistan's reforms. The fund warns against cutting interest rates too quickly, fearing a return of inflation. Policymakers must balance growth with price stability, under IMF scrutiny. The state bank's recent rate cut will be closely watched by the IMF. The government must align domestic priorities with IMF commitments. The IMF isn't dictating policy, but its guidance is key to staying on track. Ongoing dialogue with the IMF will shape Pakistan's economic future. What does 5.6% inflation mean for ordinary people? For families, it means grocery bills finally stop climbing, easing daily stress. Small businesses benefit from stable costs and lower borrowing rates, encouraging investment and job creation. Lower inflation restores faith in the future. People can plan, save, and aspire again. But not everyone feels relief right away. Core costs like rent and healthcare remain high. The scars of past hyperinflation will take time to heal. Still, this is a crucial step toward broader prosperity. The journey is long, but hope is returning. Stability is the foundation for a thriving society. As 2026 begins, Pakistan's economic outlook is cautiously optimistic. The inflation slowdown is a major achievement, but sustaining it is the real challenge. Policymakers must balance growth with price control, maintaining fiscal discipline and supply-side reforms. The state bank's agility and clear communication will be vital. International partnerships, especially with the IMF, remain crucial for stability. The government must deliver reforms while meeting immediate needs. The goal: break the cycle of boom and bust and build lasting, inclusive growth. This inflation dip is a hard-won victory. For millions, it's a ray of hope after years of hardship. Now, leaders must make wise choices to secure a stable future for all.